Having a look at the ASX market today, the market is down by about 1%, 1.07%, which is quite a drop. So as always, I'm a private trader. I'm not some financial guru. I'm not selling courses or books or strategies. There's no newsletter to sign up to. I am not giving financial advice. I am not a financial advisor. I'm just a dude sitting at home in my office. Well, actually, it's a spare bedroom. Trading real money on the real Australian market and recording it. And if you can benefit from it from an educational standpoint, great. But don't take anything that I'm doing here as financial advice. It's purely educational and it's purely based on my own objectives and understanding and experience in the market. And I have no idea what your objective in the market is, what your financial situation is, what your trading experience is. So I am not giving financial advice. I'm purely giving factual information, and this is an educational video. So I'm looking for a trading opportunity. So if I have a look at the markets, I know that even in a declining market, there are going to be obviously some stocks that are declining more than others, and obviously some that are less than others. So I'm going to look in decliners, and I'm going to look at large cap decliners. Now, what I'm looking for in this set of large cap decliners are obviously stocks that have fallen quite dramatically. PNI is down by -6%, which is obviously the biggest drop today on the market for one single stock. But what I'm looking for are stocks that have dropped and are probably closer to their all-time low rather than somewhere in the middle or their all-time high. So if I look at PNI, and I can see that this has ranged between $10.34 is the lowest, $27.11 is the highest. It's currently at $21.50, so it's up near its higher point. So it hasn't really fallen that much, meaning if I look at the actual stock, PNI, and look at the chart, to me, this is not a stock that has fallen far from the tops and literally could still have quite a long way to fall, to come back to its previous lows. So I'm not really interested in this stock, but that's my personal view. I'm more interested in something, so this one's last price is $100. This is somewhere in the middle. It's traded between 86.70 and 154. PLS, Pilbara Minerals. This one looks good in a bad way, if that makes sense. So this one here is last price $1.87.5. Its 52-week range low is $1.85.5. So it's pretty much near its lowest point over the last 52 weeks. It's been as high as $4.58. So that to me ticks a few boxes. Let's have a look at this one. So I'll look at the charts. So you can see this is a completely different story compared to the previous stock, where this one's been up as high as around $5.50 or so, and it's been as low as $1.88 or 85 or whatever it was, and that's where it is now. So this is a falling stock. So the question I'm asking myself now is, how much further is this stock going to fall? And obviously I have no way of knowing that, so I have to take a fairly educated guess. Now, if I look at where the stock is today, I can kind of make some assumptions, and that's all I can do. In that I can say, look, it reached this point way back in 2021, it pushed through, it then came back to test it, it bounced off. It came back to test it, it bounced off. It came back, never reached this point again until fairly recently, as in the last couple of days. So we are now at a point where this stock has come back to retest this price, and it can either fall through it or it can go up. And that's the decision I have to make. So the question now is, do I want to own Pilbara Minerals for around $1.88 or thereabouts? So I have a quick look at the options. And let's just say hypothetically, yes, I'm happy to own this stock for about $1.75 or so. We are currently at 4th of March, 1:23 p.m. Sydney time, which is 10:23 WA time. So I'm going to have a look at the options that expire in the next month or two. So we're currently in March. So let's have a look at the options that expire in May to buy myself a bit of time. Current price, of course, is $1.87.5. Put options on the right, call options on the left. So these are all the calls. These are all the puts. So I want to look at the put options that expire in May. And I'm going to say I am happy for somebody to sell me their PLS shares at expiry, because I'm going to sell European style options rather than American style options. And I'm happy for somebody to sell PLS to me on the 15th of May for $1.81. And at the moment you can see that the bid and ask is 8.5 cents and 13.5 cents. So I am going to sell some options somewhere in the middle there, hopefully. So I am going to make sure that these are European style options, which means they can only be exercised at expiry. Nobody can come knocking on my door tomorrow, the week after, forcing me to buy Pilbara Mining shares until these options expire. The contract size is for 100 shares, which is what I'm looking for. So I'm going to click on sell, and I am going to sell to open because I am opening a trade. I'm not closing an existing trade, I'm opening a new trade. The option is PLS LK9, which has an exercise price of $1.81, expiring on the 15th of May, 2025. And the bid and offer is 8.5 cents and 13.5 cents. So what I'm going to do is I am going to put in a offer that is more enticing than this, so that hopefully this guy or whoever's in line will come up and say, yeah, I don't really want to pay 13.5 cents for these options, but I will pay 9 cents or 11 cents or something else. So let's maybe try 10 cents and we'll try maybe 20 contracts. Now, if this trade is accepted, that is going to give me, right now, $162.19 after costs and brokerage. So essentially, 20 contracts at 10 cents each is $200, less brokerage and costs of $34.95, an exchange traded option contract fee of $2.86 is going to leave me with a total profit of $162.19 deposited into my bank account right now if this trade goes through. Now, of course, my commitment is then to have to buy 2,000, so 2,000 PLS, Pilbara Mining shares, for $1.81 each, which of course is a total of 1.81 times 2,000, $3,620, which is actually a very good rate of return. We'll do the calculation in a moment. First, let's place this order. So I click the proceed button. It's just confirming, are you sure you want to do this? I put in my trading password and hit submit. It's asking me to confirm that I know it's a European style option. I need to confirm that it is consistent with my trading and financial objectives, and that my order is a result or could result in a short exposure. Yes. Okay, so again, that's just letting me know my order's been submitted. 20 contracts of PLS LK9 for 10 cents per contract is what I'm offering to sell for a total credit after costs of $162.19. If I go to manage my orders, bang, I can see that there are no orders found, no outstanding orders. What does that mean? It means the order got accepted and has already gone straight to market, and therefore that money's been put into my account. Let's have a quick look. Now if I go and have a look at my emails, I can see I've just got this email come in from CommSec, the trading platform that I use, notifying me that they've just sold 20 contracts for $1.81 put options expiring 15th of May 2025 on my account. Today's the 4th of March 2025. They've sold 20 contracts, 20 put options for 10 cents per contract for a total of $200, less GST and brokerage costs, giving me a total amount in my pocket today, $162.19, which is pretty good. So what I want to do now is work out what is that rate of return, what is my risk on this trade. Let's have a look at that. I like to come over to this website here, time and date, and I put in today's date. Today's the 4th of March 2025. When do my options expire? Well, I know that they expire in May, which is the 5th month, and they're expiring on the 15th of 2025. So I calculate the duration, so I know that it's a 72-day trade. This is today, this is the end date, this is the result, 72 days. So then the next website I go to is calculator.net so that I can work out my rate of return. So I put in again today's date to the expiring date, and I know that I have to invest or potentially have in my bank account, on the chance that I get exercised, $1.81, 1.81 times 2,000 shares, $3,620, and I expect to get back the $3,620 plus the $162 that I'm pocketing today, so 3,782. So that's how much I'm risking, 3,620. This is how much I'm expecting to get back. I'm expecting my $3,620 back because I'm expecting I don't need to spend it because I'm expecting that I don't get exercised. But if I do, that's a different scenario. This scenario is I don't get exercised. I get my $3,620 back because I'm not using it, and I get to pocket the $162 now. That's my expectation. So I click on the calculate button, and here's my result. It is saying that my return on my investment is 4.48%, which is great. Close to 5% return. Annualized, that's 24.85, almost 25% return on my investment. So that's pretty good, because I know that if I put $3,620 into a bank account, I may get 5% or 4.48%, but I'd need to leave it in there for a year, not 72 days. So this is a doable strategy because it's 72 days my money's tied up to make 5%, not 365 days. So I like that. So that's just another trade. Subscribe to my channel if you haven't already. Hit the bell notification, and I'll keep you posted on how this trade pans out.